Welcome back to the channel, guys. I'm your host, Buck Ning, and today we're going to go through an income statement, which is completely different than what I usually do on this channel, but I feel like it's good for new investors to know, to start learning, because it is super important. There are three major statements that are very important when it comes to doing your research in a company, and that starts with the income statement, the balance sheet, and the cash flow statement. And those are the three that you kind of want to look into just to really figure out if it is a good business to invest in, because I know a lot of people, especially this year and this new coming year, there's a lot of new investors that are doing a lot of this hype stuff, and not actually looking at fundamentals of a business and understanding what a business actually does. They're just looking at a stock price and hoping to make a dollar. But this is for more in-depth research. If you want to learn how to do that, I really suggest it, and I'll show you guys what I look for when it comes to analyzing these three statements. But we're only going to go through one statement today, which is the income statement. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so the company that we are going to be looking at is a company that I've been looking to invest in, which is Logitech. So we'll head over there right away. But so you can find the annual report. I always go with the annual report. You just Google it, just Google annual report. In the US, they're called 10Ks. In Canada, you just look up the annual report. You should be able to find it on the company that you're looking for. And so this is, so if you, it'll look something like this. This is a 10K. This is for the United States. This is for Logitech International. It says there, you scroll down, you go down to the table of contents, and it should be financial statements, supplementary data. Click on that, scroll down a little bit more, and here it is. Notes of consolidated comprehensive income. This is the one we want. Scroll up a bit. So this is your income statement. You can actually find this on where else can you find this? You can find this on Yahoo, and on Yahoo Finance, there's a term at the top that says TTM. That stands for trailing 12 months, so the past 12 months. As you can see here, this is just the 3 years. I do believe Logitech's year ends in March, so you can see that on here as well. So it gives you a specific year. So what is an income statement? Income statement is a summary that shows what the business brought in sales and the expenses of sales. And so that's essentially what it is. So we'll go through this kind of line by line. So it doesn't say income statements up here. There are other names for like consolidated statements of operations. As you can see in brackets, it does say in thousands, except per share amounts. So what that means is these numbers, you just add 3 more zeros to the end just to shave off 3 zeros off of there. So this number is not actually 2 million. It's actually 2 billion. So you just add the 3 zeros at the end. So we'll go ahead and start going through line by line on showing you guys how to read this and understand what it is. And then I'll share with you what I'm looking for when I'm going through an income statement and what that means. You'll hear a lot of terms when learning to invest. Top line, bottom line. Top line is literally the top line of your income statement, which is net sales, is the amount of money they brought in selling their products. So Logitech is responsible for selling mouses, keyboards, headphones, speakers, a lot of things, webcams. So it's more of, I think they call it peripherals, but it's just technology. So it's keyboards, etc. So the amount that they sold in 2020 was I'm gonna round up just a little bit. So I'm not gonna say the exact number. So it was $2.98 billion in 2020. We got 2.79 billion in 2019, and then in 2018 we have $2.57 billion. Okay, so that is the amount that they sold that year in products. So for Logitech, like I said, it is like your mouse and keyboards example. My mouse is a Logitech. My keyboard is Logitech. My webcam is Logitech. I use a lot of things that are from Logitech. So this is international sales and everything. So that is that. And then we have on the next line here, cost of goods sold. Okay. Cost of goods sold is the line that talks about how much did it cost to make that product. It's the cost of what it takes to make that product And so, you know, there's plastic on here, there's a little bit of rubber on there, and there's chips in there and electronical stuff like that. And so cost of goods, we come in with a solid in 2020, a solid number of $1.85 billion. We got 1.75 billion in 2019, and 2018 we have 1.66 billion. Okay. Gross profit for Logitech in 2020 was $1.12 billion. In 2019, it was $1.04 billion. In 2018, we are coming at 909 million. So almost a billion, but $909 million for that. Okay. Now operating expenses is the next line. It's so funny because in the 10K, they don't, in this one specifically, they don't make the letters bold to show you categories. Okay. So, which is all right. But operating expenses, what is operating expenses? Operating expenses is your employees. You're paying for employees. You're paying for marketing, sales, research and development. Another term for this, SG&A expense, but they tend to break it down. So marketing and selling, they had 533 million in that category. Research and development, 177 million in 2020. General and administrative, $94 million in there. And again, amortization, not too concerned about that. And restructuring charges, not worried about that. But total operating expenses in 2020 was $845 million. Okay, or is that right? Yeah, $845 million there. 2019, 773 million. And in 2018, 679 million. So these are expenses that help keep the business running, help promote products, bring products out there. So it is, you'll always see this on Yahoo. I do believe they call it the SG&A, which is general administrative, sales and general administrative term in the Yahoo Finance. So next line here, so that's total operating expenses. That's how much it costs to make sure that everything is running sound. Okay. Next is operating income. Operating income are things that are not directly related to the core of the business. Okay. So a lot of businesses actually invest to make an income, or it's just not, it doesn't generate sales. If you understand what I'm saying. So an example would be like machinery. Okay. Operating income, that's what it is. So there's machinery that doesn't directly relate to the sales of mouses, keyboards, and things like that. So that's what that is. So operating income, you have something of $276 million. We'll call it 277 in 2020. 2019, 263 million. In 2018, 229 million. And that's how much they had for operating incomes. Other income net would be your depreciating assets. Not depreciating assets, but like to pay for maintenance on machinery. It's just other income net. Okay. Income before taxes, that is how much they made in taxes, and then in taxes, of course. So net income comes down to $449 million. We'll call it 450 mil on that side of things. Which is correct, I believe. Yeah, 449. Let's just call it 449 million. 2019, 257 million. 2018, $208 million. Okay, and that is net income. This is what is called your bottom line. You'll hear that when you start learning more about investing, people talk about the top line of a business and a bottom line of a business. Now, this is not something that we talk about a lot when it comes to investing. I don't see a lot of people talk about this stuff or really understand it. It's always hypothetical or speculative. You know, they never talk numbers for some reason. But remember in my other video, worst advice you get from starting out investing. I'll put a link up in the corner here. But I talk about how the marketplace, the stock market, is a marketplace that comprises of actual businesses that actually do something that make a profit, you know, and we have ownership in that when we invest into that company. Okay, so I will put a card up there for you. So what's the next thing on the line here is net income per share. So this is your prices of your basic share and diluted. What is the difference between basic and diluted? Basic is the amount of shares, the price of the share, sorry, net income per share is the price of the earnings per share, so EPS, earnings per share on the existing amount of shares outstanding already. Okay. That is how much. So typically what you can do is take the market cap of this company, Logitech. I do believe it's about $18 billion. And you divide that by the outstanding amount of shares, and you should get this number. If this number is increasing over time, that is a good thing. Okay. It means you're making more, you're earning more per share because the business is growing. Okay. What is diluted? Diluted is the amount of shares that could possibly be issued. Possibly is the key word here. So when management, so your CEOs, the board of directors, everyone who is part of the company that helps the business run, if they hit a certain milestone, whether it's in stock price, whether it's in growth in the company, they issue more shares as a reward, and that creates these diluted shares which come out to the market, which they can decide to sell or whatever it is. Okay. So you can see here on the bottom, the weighted average shares used to compute net income per share. Okay. These are in millions. Basic, this is how much there is currently. And I don't know if that's an exact number or if that's as close as they can get. That is right now, it sits at 166 million. And then diluted, if they were to hit the mark, hit their milestones in management and everything, keep shareholders happy, that'll, if you can see that increased by almost 3 million shares that went on. And so that is your income statement. Now, when I'm looking at an income statement, what I typically want to pay attention to is your net sales. Okay. Now this only shows 3 years. And this is why I talk about due diligence and doing your research. I like to go back at least 5, if not 10 years on an annual statement if the company has been around for that long. Logitech has, and I can go back 10 years, and not all platforms allow you to go back 10 years. This is why I think if you're new to investing and you're beginning and you want to actually learn about fundamentals of a company and what it does and see and understand what it's actually doing, the 10K that's what it's for. Go through those 10Ks and go through it, because you can only see 3 years here. Go back to 2018 10K and see what they did in 2017, 16 and 15 and 14, 13, 12, if that makes sense. Do the hard work now, because you'll learn better doing the labor. There are platforms that you can pay a monthly subscription to get that information like that. But I do believe it benefits you from digging in and learning through laboring and figuring out. You'll have more value doing it that way. And so what am I looking for when it comes to the income statement of a company? So I go through like a filter system. So the first thing I look at is net sales. Has net sales increased in the past? I like to go past 5 years on this one. There's only 3 years here. And sometimes you might be missing some data. And I just want to make that very clear. Usually 2018, here we are, 2.57 billion. And I'm rounding up. 2.79 billion in 2020 is 2.98 billion. That is a check mark for me when it goes to looking deeper into the company. Now, if there's a year where it's slumped and it's lower, I will look into that. The point of going through an income statement is to go through and be able to figure out a story, and not a biased story, but be like a detective and figure out what happened in 2019 that the revenue of the company went down. Okay. So we go down here. The next thing I want to look for is net income. I want this number to increase also for the past 5 years, because this number can actually do an inverse. Your revenue growth can be super high, but your net income can be very super low. And that is a red flag. I will look into that and see what has happened there. Has operating expenses gone up? Did something happen with the business? Why is that? Okay, I want them to grow at a similar rate. So here, 2018, 208 million, 2019, 257 million, and 2020, 449 million of net income. That is growing. That is a good sign. I always like to go back again, 5 to 10 years. I want to see growth year over year and at least consistency. I don't want to see digression. If there is digression, it doesn't mean the business is dying. I just want to know why. Okay. And so that is what I look for in the income statements. Hopefully that makes sense, guys. A lot of the times there are more lines to operating expenses or operating income. If you look up the terms, you'll be able to find out what they mean, because they don't include everything, because sometimes some companies operate differently. Logitech operates differently than Apple, and Apple operates different than, let's say, a bank. You have to really understand what the business does, what it's bringing in. Because right now, this year, all I see are people talking about speculative stuff. I don't see them talking about the growth year over year because it's boring, and it's like, who wants to read this? The thing is, if you're not reading this, I think you might lose money. And this is not financial advice. This is just letting you know that there are a lot of people out there that are just talking. And I don't see them talking about net sales, year over year growth. How is the company growing? They just say the company's growing. What is that? Growing in what way? In losing money? Are they growing and losing money? Are they growing and making money, right? And so I just want to share this with you guys because a lot of people don't know how to read income statements. I'm not an accountant. And so this is just basic accounting stuff to read and understand what this is, but also to do your research. And so that is how you read an income statement. If you have any questions, leave it down in the comment section below. Be happy to answer them for you. But you want to look at this. You want and figure out, is this a company I want to invest in? Because if you're investing in companies that don't make a profit and don't make an earnings, or don't project in a way that looks like they're going to make a profit, because I do speculative investing as well. If I believe in a company and I look at maybe their quarterly, but at minimum, I look at their yearly and figure out what's going on, and just makes me do more research. And so when I say due diligence, do your due diligence. And that's what I'm showing you guys here today. So in the next video, which will probably be Friday, we will talk about the balance sheet and what is on there and what I look for on there. So other than that, guys, I won't make this any longer, but hopefully you guys did enjoy the video, and make sure to, tickle that little like button. Make sure it turns blue, and we'll definitely see you guys in the next one. Hopefully you guys did enjoy again. And again, I'm not a financial advisor. I'm definitely not your financial advisor. And if you need professional advice, go seek it. And so, yeah, we'll see you in the next one. Bye.